Good afternoon. This is Curtis, aka Chili, and today's video is about how to get a 680 or 700 FICO score. So here I am. I'm on the myfico.com website, credit education. What is the makeup of your FICO score? Whenever you go for a personal loan, car loan, credit card, or even a home loan, construction home loan, the bank considers your FICO score, which is called your Fair Isaac algorithm, which computes your personal data over the last 4 or 5 years and determines a FICO score. So here we are on the MyFICO website, and let's just read here. It says, My FICO scores are calculated using many different pieces of credit data in your credit report. This data is comprised of 5 categories: payment history, 35%, amounts owed, 30%, length of credit history, 15%, and new credit, 10%, and credit mix, 10%. So in this video, I'm going to go over, all 5 of these factors. The number one factor is your payment history. It does not matter if it's a car loan, credit card, personal loan. This is your credit score right here, 35%. Basically, if you miss one payment on a credit card or car loan or personal loan, your score will drop by 50 to 100 points. This is the foundation of a credit score, payment history. Like I said, it could be a credit card. If you have a new credit card, the first 6 months are very important. Make those first 6 payments on time, and you have no issue of credit, basically. The next portion that comprises 30% of your credit is amount owed. So for example, you have a $5,000 credit card. If it is over $2,000, the limit of the credit card, you're sort of in trouble. They do not, 30% of your credit card, it starts to make the lenders feel that you're risky. So actually, let's say 30% of $5,000, that would be like basically 3 times 5, $1,500. So anything over $1,500 starts to appear a risky borrow to your lender, your bank, your credit union, whatever. So that's the part of the FICO algorithm score. Installment loans, they're fine. If you have a 5-year installment loan on a car or on a loan itself, it does not matter. As long as you're on time with it every month, if it's a 5-year, if it's a 2-year, if it's a 1-year loan, as long as you're making that payment on time, you're fine. It does not really affect this amounts owed per se. The next part of your score that plays a big role is length of history. Credit card or car loans or payment history or any form of credit that's on your credit report, less than 15% of your score is time. So anything less than 2 years is sort of risky to the bank. Essentially, what they like to see is 2 years, 1 up year and 1 down year. That's just the law of averages. They like to see over a 2-year span how you perform. So if you can stay all your cards paid on time for the last 2 years, you'll pretty much have a decent FICO score. The next part I would like to talk about is 10% of your FICO score, or your beacon score, sometimes called by the bank, is called new credit. New credit is important every so often, but you should not open more than 2 lines of credit, no more than twice in a year. So that means, you go get a personal loan anywhere from January to June, and anywhere from June to December, you can open a credit card. That's it. If you want to get the best of the best credit cards, they do not like to see, just for example, Chase and some other prime lenders do not like to see no more than 5 inquiries on your credit. So even though it's important to have new credit every now and then, it's only 10% of your score. 10% of your score, of a 850 score, is 85 points. And the last portion, 10% of your score, is the credit mix. We just briefly talked about personal loan, credit card, car loan, same thing, any kind of installment loan, where you're making a fixed amount payment every month. And your lastly, biggest loan, actually could be your home loan. So this is how you basically get a 700 FICO score. You start off with a personal loan with your bank. You go in, you say, hey, I need, I think generally they start anywhere from 2,500 to 5,000. Go in there, even if you have to secure the loan, you go in, whether you have to put the $500 down or they give you the loan. Basically, if the bank sees that you have good savings, and you've been a consistent customer, deposits, etc., and you don't have any derogatory information in your file, they'll give you a personal loan. So that's number one. That's how you build your banking relationship. That's how you build your FICO score. You have a loan, you make your payments on time. The next consumer product after the personal loan is then the credit card. The credit card is a big factor in determining what we call amounts owed, the 30% of your FICO score. So we just said 30% of 800, that's 240 points of your FICO score is your credit card balance. So again, well, if I go back to my previous example about the $5,000 credit card, you're talking about 1,500. No higher than 1,500 of your $5,000 credit card should be on the credit card. That way you get the maximum number of points. You get that whole 240 something points by keeping your credit card balance low. So even if you want to even a higher, get the max 240 points, you want to keep that balance no higher than on a $5,000 credit card, no higher than 10%. So that would be actually $500. Okay. So that, again, we went over the second product that you build your banking relationship to build your FICO score, which is a credit card. The third product that we, as consumers, need is the wonderful, seductive car loan. It's a great product. Everybody needs a car or automobile to get to and from work or where their business dealings is. The car loan is, again, it's very similar to a personal loan, but it's just on a higher amount. So, you borrow, 2,500 for here, the personal loan, but here for the car loan, you borrow, let's say for your first vehicle, you borrowed $15,000. So that carries a little bit more weight, but this is a collateralized debt. So this type of credit, most people are seduced by it. Hey, I want to drive a Mercedes-Benz or a Lexus, but all the bank cares about is that you make that payment on time. So if your payment is $400 a month, you make that payment on time, that goes toward points on your FICO score. And last but not least, the next loan that consumers should go after the car loan is the wonderful home loan. Now, again, the home loan is a collateral loan. It's usually a 30-year fixed, or if you're building a home on a piece of land, again, this is very similar to the installment loan. Once you have the decent 680 FICO score, you apply for a home loan. You get sort of prime rates, anywhere from 700 to 740. The rates get better. I think right now for a home loan, it's going anywhere from 3 to 4%, maybe as low as 2.5. But if you want a decent, I guess, rate right now, which would be about 3 or 4, you could probably get that with a 680 FICO score. So as you see, guys, I did a basic over time graph here showing, hey, you open a bank account, you go in first, you start a relationship with a personal loan, and then you get a credit card, and then you get an automobile, and last year you get a home loan or condo or a construction loan at sort. And all over this whole period of time, you're building up that wonderful FICO score that the bank or credit union or lending institution uses to, provide you the best rate. So that's one of the biggest things I like to tell people about loans. Loans are based on your credit score. So the fact that you got the car loan or the credit card, that part is great, but the rate is what matters. So we want to use credit cards or car loans and condo loans or personal loans strategically. You just don't want to go out there and get a car loan just because they said you're approved. You want to look at it as, hey, if I'm going to get this car, I'm going to get it at a prime rate, 3-4%. Or if I get this home loan, I'm going to get it at a prime rate. So that's just a quick video, guys, on how you achieve the 700 plus FICO score. Here it is, 775, 725 on Equifax, 752 on Experian. This is how you do it, building your credit over time through these 4 or 5 products: personal loans, credit cards, automobiles, home loans, construction loans, motorcycle loans. That's how you build your credit score. And also, I have a Facebook group. So if you're interested in more information about building a solid 680 FICO score, I have a Facebook group here. It's private, but you're welcome to join it. I'm on Facebook, and we talk about different topics. Again, the same topics: payment history, credit card use, keeping your credit profile clean, and length of credit history, as we covered on the MyFICO website. So thank you for watching. Thank you for listening. And please like and subscribe to my videos, and we'll see you on the next one.